Thank you, gents. So first we paid with cash, then we paid with cards, and now we pay with our phones. What is next? Every day, global innovations in digital banking are changing the way we see, certainly, and definitely use our money. And here to share what's next in the world of digital banking and payments is the executive of emerging payments for Nedbank, Chipo Mushwana. Chipo, welcome.
Hello, how are you?
Always good, always good. Great to have you on the couch. This is a really interesting discussion to delve a little deeper in because it feels like we're on a frontier here. I know, having spent a lot of time, obviously, with the Nedbank team and on that frontier, because you guys try to keep yourself on the fringe, I've got to ask you this quite general question. Is the tech driving what consumers are doing, or is the consumer, what their needs are, driving the tech? Who's winning the battle?
So maybe let's begin by understanding that the introduction of tech has definitely changed consumer behavior and consumer demands, for lack of a better word. Think about the introduction of the cell phone or the personal computer. It exposed consumers to what the possibilities are, right, in terms of technology and more so in terms of banking. Now what we see is because consumers are more savvy, consumers understand what they want, they are placing a demand on financial services institutions for what they actually want. They want convenient, they want transparent, and they want cheaper financial services products. And that's what we're seeing. So it started off with the tech, and now we see consumers placing a greater demand on the financial services institutions.
And you've got to answer that demand. You don't have a choice if you want to remain at the forefront. So we're seeing payment methods evolving radically. We've obviously been privy to a lot of those advancements right now. Are we seeing in South Africa a digital banking revolution? Can we call it that? Has it reached that extent?
It's definitely on its way. And it started off, it was quite nascent, but it's maturing quite steadily, right? And what we see, if you have to understand the South African context in the sense that South African, there are certain payment methods that are predominant. Cash is one of them in South Africa. Cards, specifically debit cards, and e-commerce to some extent, right? So technology has definitely influenced digital commerce to a great extent, right? And influenced the manner in which we pay. And when you talk about, are you using your app, are you tapping, are you dipping, are you swiping? And we check what's happening all around us, right? We check what's happening in China, for example. We check what's happening globally where people are using their phones to pay, where people have connected their fridges to their local retailer or store to be able to make sure that they never run out of groceries. And we take a step back and we say, okay, so where are we in South Africa?
Where do we sit in that food chain? Yeah.
Some of that stuff. So think about it. In the US today, they still use checks. When was the last time you saw a checkbook in South Africa? Right? Not so much. So we've leapfrogged through certain technologies. And you have to understand that payments are actually very contextual. So our South African environment and our nature and our macro environment demanded that we leapfrog. But when it comes to the emergence of other technology, particularly what we call the Internet of Things, which is your phone, your fridge, your house, and connecting all that to effect payments, we're still not there yet. E-commerce, it's nascent, but it's growing steadily in the South African market.
And you know, I think with South Africa, once that change does start to take hold, it can permeate very, very quickly.
It moves very quickly, and that's what we've seen globally. It definitely moves very quickly.
A big part of this relationship we have with technology relates to, and certainly you can even use social media to an extent, is the idea of instant gratification.
Yes.
We want it, and we want it now.
Yes.
How are banks keeping up with real-time payments, instant settlements, instant clearing? Because you want to know that while we're making these advancements with things becoming faster, that you know, convenience is also becoming better. These things are kind of part of that package.
So this topic around instant payments and instant clear is probably one of the most pervasive topics we have in the payments world globally, right? And we have so many payment schemes that are out there, but still no global standard. So at a global level, we haven't solved this quite yet, right?
We all just want our money now.
Exactly.
Come on,
Think
guys,
about it.
come on.
If I'm able to make a payment to you and you're running a small business, then it means you have no penalties, economies run faster, quicker, consumers get their money, etc. So the benefits are enormous, and definitely banks play an integral part in making sure that these payments are effected faster and quicker. What does that mean? It means banks have to collaborate and have to talk to each other and create some rules of engagement around how we settle and how we handle a transaction. But also regulation needs to come into place to be able to enable those faster payments to happen. The other thing that financial services institutions definitely have to do is they think about, do we build our own technical capability to be able to enable faster clearance, real-time clearance of payments? And that's normally a very expensive expensive route, and that takes long to implement. So the jury is out on whether banks are going to drive it or whether these fintech businesses are actually going to drive faster and real-time payments.
As a bolt-on to the industry.
But the jury is still out on that one.
I have a feeling it's going to move. Now that you've started on that process, it has to happen. Security, massive concern when it comes to banking, especially in the digital era where so much information is available.
Yeah.
Can you compare security as it relates to banking with your card or as it relates to kind of in that digital space? How do the two match up, and should you be comparing?
So the rule in security is that, number one, it's incremental. I'll give you an example. Just because you stay in a house and you've got a security fence doesn't mean you shouldn't have cameras inside your house. It's incremental. And the rule of security is you have to have something that is physically present to deter a breach of any sort. Same thing in the banking and in the payments world. You have your physical card, which is probably one of the most secure because we know you have it and you're the person behind the card. When you effect a digital e-commerce transaction, let's say you want to shop online, for lack of a better word, the banks have created means and ways of sending messages to you that enable that transaction is safe and that transaction is secure. So you either get it and approve it message, or you get a one-time PIN. It's not the same PIN you're going to use when you're in store and you're actually buying groceries, etc.
It just relates to
and the idea is that
transaction.
message is encrypted and that message is secure and is not open to any form of interference. So it's incremental. You cannot compare the two because both of them work in collaboration and conjunction with each other. The other thing that banks do is something we call tokenization. So in essence, what I do is I take your PIN number and I attach a token. It's like a mask around that particular token. So what I do is when I send that token out, whoever's receiving it will absorb it or consume it based on the fact that it fits the specific requirements that the token should have. But that PIN is still masked in it. And as and when it's necessary, we expose that PIN and that transaction is effected. So that's what we call tokenization, and it's part of the digital commerce transaction process that needs to be in place for it to be safer and quicker.
Okay, well then, knowing that this is all incremental, very quickly, will we see a cardless future?
I don't think so. And I don't think so because payments by default are contextual. And payments by nature, what we are seeing definitely in terms of trends is that consumers want more ways to pay. Right. Just because I can pay with my watch or I can pay with my phone doesn't mean I throw away my card. Right. And normally, the manner in which I pay for something is dictated by the receiver of the money. So if you go to a less informal market today, for example, by default, you generally would use cash. In some economies, you'd use Mobi money. Yeah. Right. But if I go to a large retailer, for example, I definitely will have my card in hand because I know I can use that to pay. So it's very contextual. But what we know is more ways to pay is better.
It's better, but they all kind of work within that same bubble. Old school is still winning, but the new school is catching up fast. We'd love to hear from you guys as well. You can let us know on our social media platforms if you still rely on that bank card and how you use that bank card. Are you tapping? Are you swiping? Are you using your phone to pay? Let us know your thoughts on Expresso's Facebook page on Twitter as well.